Good afternoon, ladies and gentlemen, and welcome to the Trinidad and Tobago Securities and Exchange Commission's webinar entitled Protecting Oneself Against Financial Fraud. Here's an outline of what will be covered in the webinar today. Common characteristics of investment fraud. Common characteristics of victims of investment fraud. Types of investment fraud, including Ponzi schemes, pyramid schemes, advanced fees, pump and dump, affinity, and high-yield investment schemes. Specific examples of frauds that we have investigated in the recent past. How to protect oneself from investment fraud and the complaint process. The Trinidad and Tobago Securities and Exchange Commission, or TTSEC, is the sole regulator of the nation's securities industry and is mandated to look after the interests of investors in Trinidad and Tobago. The securities industry includes the market for stocks, bonds, and mutual funds. Our fellow regulator in the financial services sector is the Central Bank of Trinidad and Tobago, which regulates the banking and insurance sectors. As at June 2015, the value of the securities market was over $300 billion. This represents over 160% of gross domestic product. Please note that the Commission does not make recommendations on what you should invest in or with whom to invest. Our role is to ensure that the market operates in a transparent manner and through our educational initiatives to equip you with the tools to make informed financial decisions. Three of the major roles of the TTSEC include the registering of all persons who deal in securities. Check the list of registrants on our website www.ttsec.org.tt before engaging in any securities transactions. The conduct of routine market surveillance and investigation of possible breaches of the Securities Act 2012, as well as customer complaints against any person conducting securities business, whether registered or not. Ensuring that registrants are operating in compliance with the legislation and conducting of on-site inspections of registrants and self-regulatory organizations. Many persons believe that they can never be taken in by a scam artist. Unfortunately, our records show just how easy it is to fall victim to fraud. Investors are always seeking safe havens to place their monies. Unfortunately, this situation also brings out the opportunists who will try to steal even the last dollar from persons who are not equipped to differentiate between real investment instruments and scams. Here are some common characteristics of investment fraud. The salesperson or fraudster tries to explain the investment using sophisticated terminology and fancy phraseology. The returns on the investment are always exceedingly high. There are promises of low risk, no risk, or a guarantee. The fraudster does not conduct transactions in an office. There is little or no documentation provided in relation to the transaction. The fraudster may demand that the investor makes immediate and rushed decisions. In more sophisticated frauds, the fraudsters dress in designer suits and drive expensive cars. They have rented office spaces, receptionists, etc. To gain the investor's trust, the fraudster boasts of his clientele through name dropping. The fraudster pays out money to the earliest investors, encouraging them to invest again. Common characteristics of victims of investment fraud. They are men and women. Some are young, others are middle-aged. They may be seniors. Some are retirees. They may have low incomes or average incomes. Some are even high-income earners. Yes, that's right. There is no one common characteristic of victims of investment fraud. Many have come into a windfall, back pay, lottery winnings, pension, or gratuity. They rely on friends and relatives to guide them. Generally, they are not very financially literate. However, no one is immune, and we have investigated schemes where many of the victims were well-educated professionals in various fields. The most common type of advance fee fraud that exists in Trinidad and Tobago is the Nigerian advance fee email that appears in your inbox. There are numerous variations of the proposal, but the most common ones that are received locally would be either that you had won a lottery, which by the way, you never took a chance in, or the author of the email had come into possession of a large sum of money, $35 million, and he is seeking your assistance in moving the mentioned sum to some other location. The letter will also include a request for personal and banking information. The primary reason for the information is not to rob the victim's bank account, but to perpetuate the illusion that the deal is legitimate. For the next week to 10 days, the perpetrators establish a level of trust with the victim. This is accomplished by sending the victim more official documentation, verifying the bona fides of the deal and the people involved. What happens next is the most crucial point in the fraud and can take a number of directions. A victim will be advised that the transaction is near completion. However, an emergency has arisen and the money is needed to pay an unforeseen government fee or tax before the money can be released. If the fee is paid, the criminals will come up with another problem that requires immediate payment by the victim. Each problem is supported by official documentation. Affinity fraud. The U.S. Securities and Exchange Commission defines affinity fraud as follows. Affinity fraud refers to investment scams that prey upon members of identifiable groups such as religious or ethnic communities, the elderly, or professional groups. The fraudsters who promote affinity scams frequently are or pretend to be members of the group. They often enlist respected community or religious leaders from within the group to spread the word about the scheme by convincing those people that a fraudulent investment is legitimate and worthwhile. Many times those leaders become unwitting victims of the fraudsters' ruse. These scams exploit the trust and friendship that exist in groups of people who have something in common. Because of the tight-knit structure of many groups, it can be difficult for regulators or law enforcement officials to detect or take enforcement action in an affinity scam. Victims often fail to notify authorities or pursue their legal remedies and instead try to work things out within the group. This is particularly true where the fraudsters have used respected community or religious leaders to convince others to join the investment. Pump and dump schemes involve scam artists making false and misleading positive statements about cheap stocks that they already own. These schemes may take place on the internet using an email spam campaign or through media channels via a fake press release. Often, the stock promoter will claim to have inside information about impending news. Remember, insider trading is an offense. Newsletters may purport to offer unbiased recommendations, then tout a company as a hot stock for their own benefit. Promoters may also post messages in chat rooms urging readers to buy the stock quickly. This generates a demand for the stock among their victims. The greater the demand, the higher the price. thereby artificially inflating the price. The increased demand, price, and trading volume of the stock may convince more people to believe the hype and to buy shares as well. When the price is high enough, the scam artist then sells the cheaply purchased stock at the higher price. Once the operators of the scheme dump their overvalued shares, the price falls, and investors are left holding stock that is worth significantly less than what they paid for it. Ponzi schemes. These schemes share many similar characteristics in which unsuspecting individuals are fooled by unscrupulous schemers who promise extraordinary returns. The essential difference between a pyramid scheme and a Ponzi scheme is that a Ponzi schemer will only ask you to invest your money. You won't be asked to take any action other than handing over your money. He or she will claim to take care of the rest and give you your returns at a later date. Ponzi schemes are based on fraudulent investment management services. Basically, investors contribute money to the portfolio manager who promises them an exceptional return, and then those investors are paid with the incoming funds contributed by later investors. The person organizing this type of fraud is in charge of controlling the entire operation. He merely transfers funds from one client to another and forgoes any real investment activities. The most infamous Ponzi scheme in recent times involves Bernie Madoff, who, excuse the pun, made off with persons' money. He was the former chairman of Nasdaq Stock Exchange, former stockbroker, and a financial advisor. He was convicted of operating a Ponzi scheme that has been called the largest investment fraud ever committed by a single person. Prosecutors estimated the size of the fraud to be US $64.8 billion, based on the amounts in the accounts of Madoff's 4,800 clients as of November 30th, 2008. On June 29, 2009, he was sentenced to 150 years in prison and US $170 billion in restitution. Apart from all that he has lost, Madoff has also had to suffer the loss of his two sons. One committed suicide as a result of the shame of his father's deeds. The other claimed that the stress of the publicity around what his father had done caused him to develop cancer. He subsequently died from the disease. I am sure many of you would have heard of Alan Stanford, who was a former prominent financier and sponsor of professional sports. He was the chairman of the now defunct Stanford Financial Group of Companies and was a citizen of Antigua and Barbuda and the United States, who contributed millions of dollars to politicians in both countries. In 2009, the US SEC charged Stanford with running a massive Ponzi scheme. On March 6, 2012, Stanford was convicted and sentenced to 110 years in prison for perpetrating a US $7 billion Ponzi scheme that swindled 30,000 people in over 100 countries. A pyramid scheme is really a business model, the main characteristic of which is that participants, investors, only make money by recruiting more participants or investors. Usually no product or service is delivered. Elements of a pyramid scheme can include investments paying interest monthly, interest rates above market rates, programs running for defined periods, commonly 1 year or less, and the promoters usually encouraging you to roll over into the next program. Remember, any scheme that requires new investors to pay existing investors is a fraud. This diagram shows that the business model on which a pyramid scheme is premised is non-sustainable. The first tier of investors number 6 persons, who in turn have to bring in 6 more persons into the scheme. Those 36 persons also have to enroll 6 persons each, and so on. The funds brought in by each tier pays the tier above. At some point, however, persons are unable to bring in the required number of persons to complete the next tier, and the pyramid begins to totter. Newly enrolled persons get nothing. Persons who rolled over their money get nothing. And only the persons who got in early and got out, and of course the promoter, are the ones smiling all the way to the bank. Diamond Rewards is a United States-based online program developed by American David Wright. The program was advertised as an online 2x3 reversed revolving matrix and promised the investor either a sapphire stone, a diamond, or monetary reward, depending on the investor's ability to cycle a matrix board. Locally, there were several persons who acted as agents for the Diamond Rewards program. These agents recruited and convinced numerous nationals of this country to invest their funds in the program and promised a sapphire stone supposedly valued at 2,000 TT currency. This was, of course, upon the subscription in the sum of $2,000 TT. On joining the program, each subscriber to the program was advised that he or she would be placed on a specific tier on a matrix board, with an opportunity to elevate to the top of the board and collect a monetary reward of 20,700 TT dollars. However, in order to ascend on the board, the subscriber would need to recruit 2 other persons, that's level 2, whose subscriptions would be aligned to his or her elevation. Further, when those level 2 persons recruit 2 persons to join the program, the elevation continues, and so on. Several subscribers to the program, who were interviewed by staff of the TTSEC, indicated that they were members of a church in Belmont, and they were encouraged by their pastor to join the program. Another group of persons indicated that they belonged to a church in Princestown, and they were also encouraged by their pastor to join. During interviews by staff of the commission, some investors complained that having paid their subscription fee and recruited other persons to the program as they were required to do, they did not receive the sapphire stone, nor were they able to cycle the matrix board in order to collect the monetary reward. Other investors claim that in the aftermath of their subscriptions, they received in their respective mailboxes packages that contained a gemstone said to be a blue or a black 2-carat sapphire stone. The packages contained markings that suggest that they had been mailed from Australia. Unfortunately, when they took the stones to a jeweler, they were informed that each stone was valued between 30 and 40 US dollars, no more than $256 TT. The investigation by the TTSEC did not disclose any evidence on which enforcement action could have been taken under the Securities legislation. However, it did disclose breaches of the provisions of the Fraud and Larceny Acts. As such, the matter was referred to the Office of the Senior Superintendent Fraud Squad for his attention. Another local pyramid scheme involved a company called Fantasy Tours. This was essentially a tour company which was involved in a pyramid scheme. It started in approximately November 2005, offered 3 products, paying up to 15% every 15 days, and it enlisted more than 3,700 subscribers. Their total investment was approximately TT $43.5 million. The TTSEC became aware of the scheme when one of the members came to us after having invested because he felt a little unsure about the investment. Of course, this company was not registered with the TTSEC to do any form of business. The TTSEC had to approach the courts in the matter. An injunction was granted by court to halt trading on request of the Commission. The final recovery by investors was 53.4%, the equivalent of TT $23.2 million. Please note that the names of the persons involved in this fraud have been changed for dramatic effect. In 2010, Miss Gullible became acquainted with a woman who gave her name as Miss Bogus, and they continued to interact in numerous social settings. Miss Bogus led her to believe that she was involved in foreign exchange trading, Forex. She claimed to be doing business with the Central Bank of Trinidad and Tobago. In 2013, Miss Gullible visited the offices of the Commission and complained that during the period 2010 to 2011, she paid sums totaling $200,000 to Miss Bogus towards investments, but she has not been able to redeem her payments, nor any interest on the investment. She has since discovered that documents given to her by Miss Bogus, purportedly emanating from the Police Fraud Squad and the Central Bank of Trinidad and Tobago, CBTT, were false. The fraud. In 2010, Miss Gullible loaned the sum of $4,000 to Miss Bogus, who promised to repay the sum of $10,000 within 1 week. Miss Gullible did not receive the repayment as expected, but instead Miss Bogus told her that she would place her name in a Forex investment account. Miss Gullible saw this as a wonderful opportunity and provided Miss Bogus with her bank account particulars. As time elapsed, Miss Gullible paid additional sums to Miss Bogus, who in requesting the money said that it was needed for the completion of paperwork for the buying over of investments of other persons for Miss Gullible's benefit. Miss Gullible did not receive any benefit by the year 2011, but Miss Bogus told her that approvals had to be obtained from the Fraud Squad and the CBTT. On numerous occasions, Miss Gullible overheard Miss Bogus speaking on her mobile telephone with persons purportedly from both the CBTT and the Fraud Squad. On one occasion, Miss Gullible met Miss Bogus at the Brian Lara Promenade, where Miss Bogus produced a letter bearing a likeness of the CBTT logo and signed in the name of Mr. Conman. The letter indicated that Miss Gullible was required to provide outstanding information and documents in order to facilitate payments by August 2011. Miss Bogus told Miss Gullible that the letter was proof that the transaction was being processed. In September 2011, Miss Bogus requested that Miss Gullible obtain a police certificate of character. Having obtained it, they both went to the police administration building at Sackville Street, Port of Spain, as Miss Bogus stated that the fraud squad was located on the 4th floor of the building. The fraud squad is actually located at the corner of Park and Richmond Streets. Miss Gullible sat in the lobby and Miss Bogus proceeded inside. Upon her return, they proceeded to the Brian Lara Promenade, where Miss Bogus showed Miss Gullible correspondence purportedly issued by Lieutenant All is Good of the Police Fraud Squad. Note well, Lieutenant is not a rank in the police service. The document spoke of an investment in the name of Miss Gullible and an authorization to investing agent number 016239, Miss Bogus, granting her access to the restricted information with respect to Miss Gullible. The production of documentation purportedly emanating from the CBTT and the fraud squad convinced Miss Gullible of the legitimacy of the investment transaction. Miss Gullible continued to buy over the investments of several persons during the months that followed, withdrawing money from her savings account and making payments to Miss Bogus by way of cash and Western Union money transfers. In total, she paid 200,000 TT dollars to Miss Bogus during the period 2010 to April 2013, purportedly towards the purchase of forex investments. She was told that her investment was now worth 20 billion TT dollars. When her efforts to meet with Miss Bogus proved unsuccessful, Miss Gullible became suspicious and communicated with the CBTT and the police fraud squad, where she learned that the documentation that Miss Bogus had given to her were false, and no employees bearing those names existed. To date, she has not recovered any money from the investment with Miss Bogus. Since the matter is not a securities-related matter, the TTSEC forwarded it to the Police Service Fraud Squad for investigation. The names of the parties and companies in this example of affinity fraud have been changed, as some aspects of the matter are still ongoing. Mr. Smarty had 4 entities under his control. The names of the companies were designed to elicit trust. Primary Savings and Trust Me Limited, Premier Financial Investment Cooperative Society, Secure Holdings and Trust Limited, Believers Credit Union Cooperative Society Limited. In June 2010, the TTSEC received complaints from investors and began investigations into the allegations. We unearthed evidence that Mr. Smarty and his entities had been issuing unregistered securities to the public, engaging in activities which operated as a fraud on investors, and was suspected of misappropriation of investor funds. Only one of the entities, namely Primary Savings and Trust Limited, had been registered as an investment advisor with the Commission at the time. Please note that investment advisors are not authorized to collect money from their clients. An injunction was obtained to freeze the assets of Mr. Smarty and his entities, and for the TTSEC to conduct an on-site examination of his financial affairs. In April 2011, a High Court judge delivered judgment in the matter in favor of the Commission. The judge found that the defendants were in breach of several sections of the Securities Industry Act 1995. These breaches included carrying out the business of trading in securities on the account of another without being registered with the Commission, issuing securities to members of the public without being registered with the Commission, issuing securities to the public without the securities being first registered with the Commission, and engaging in an act, practice, or course of business which operated as a fraud or deceit on persons. Provision was also made for the appointment of a receiver manager to wind up the entities and to sell the relevant assets, inclusive of the personal assets of Mr. Smarty, with a view to disgorgement of profits and restitution to the affected investors. Based on the receiver manager's report submitted to the court on August 30th, 2013, the liabilities to investors were calculated to be $57,649,274. The recovered assets came to a total of $3,655,676. As such, there was a shortfall of over $53 million. How to protect oneself against investment fraud. Be cautious of any investment without a prospectus or offering memorandum. Walk away from any investment that cannot be verified through the Trinidad and Tobago Securities and Exchange Commission. Walk away when an investment salesperson encourages you to invest on the basis of trust. Beware of any investment salesperson who encourages you to put your life savings into a single investment. Do your due diligence. Do a background check on the individual or organization. Ask the person who is promoting the investment if he or she or the company he or she is representing is registered with the TTSEC. Confirm with the TTSEC the registration status of the person or organization. Never judge a person's integrity by how he or she sounds. Don't lose sight of your investments. Monitor their performance periodically. Never be afraid to complain if the person handling your investment does not do so in accordance with your expressed instructions. Remember, investment has an inherent risk. Markets go up and down in a cycle. Your investment losing money at any point in time is not a legitimate complaint. Check the TTSEC's website www.ttsec.org.tt for information on registration. The investor should keep in mind that mere registration with the TTSEC does not guarantee that an investment will be a good one or immune to fraud. However, the TTSEC engages in routine market surveillance and can take strong enforcement action against companies or individuals who are registered with us or who breach the Securities Act. How to complain. A victim can download and complete a complaint form which is available on the TTSEC's website www.ttsec.org.tt. The form, along with copies of any supporting documents, can be posted, hand-delivered, or emailed to the Commission. The victim can come into the Commission's office, located at 57 to 59 Don Donald Street, Port of Spain, with supporting documents to lodge a complaint. The victim can also call the Commission's complaint hotline 624-2991 extension 1611 and lodge a complaint. Upon receipt of the complaint, staff of the Commission will inquire into the details of the complaint to determine if there has been any breach of the securities laws and take requisite action. Thank you for participating in our fourth Investor Education webinar. Your feedback is important to us. Feel free to send an email with your comments and suggestions to ccei@ttsec.org.tt. You can view our previous webinars by visiting our investor education site at www.investucatett.com. I hope you have a productive day and happy investing.